Shares of ServiceNow under pressure after earnings and subscription revenue guidance miss analyst expectations. Joining us now for more on these results is Gina Mastantuono. She's the president and CFO of ServiceNow. Gina, I want to start right there with what appears like investors are sort of digesting this morning. Sales coming in a little bit lower than the street had hoped for. What sort of drove that, and what kind of levers do you feel like the business can pull to perhaps bring that back up?
Hi, Josh. Thanks so much for having me. So actually, in constant currency, we beat all of our guidance metrics. So as we all know, the US dollar has appreciated pretty significantly since the election. But on a constant currency basis, we beat all of our guidance metrics, top line and bottom line. So from a revenue perspective, we beat by 50 basis points in constant currency, operating margin and free cash flow margin, all beating guidance. So our fundamentals couldn't be stronger, and I couldn't be prouder of the world-class growth and profitability, as well as shareholder value that we continue to deliver. And these results are all on top of our raising guidance twice throughout the year. And so while FX, I would love to be able to control it, the fundamentals underlying the business remain very strong.
Well, Gina, how should investors and I guess an analyst be evaluating that, right? Because clearly it is a headwind to the business in the short term.
It is. Well, listen, I think the underlying fundamentals are where investors are really always focused. And so if you think about that, customers are continuing to show confidence in our AI strategy. We talked about we have nearly 1,000 customers already using our AI products. We had 150% quarter after quarter deal growth. So Q3 to Q4, 150% growth in the number of deals with our Agentic AI offering, and then customers who bought 2 or more of our AI products doubled quarter over quarter. So again, the fundamentals of the business remain very strong.
Gina, I want to zone in on AI for a minute, and of course we had the news over the weekend of the launch of DeepSeek, their new model, perhaps introducing the world to the concept of cheaper AI, right? I'm curious what that could mean for your business. I know you said last night in the call it's not necessarily unexpected. So is that something that you guys have already sort of baked into guidance moving forward, or is it still a potential tailwind for the business that hasn't quite been realized?
Well, what I think you're seeing is something that we had expected, is that these models are becoming commoditized quickly. So what that's going to drive is even faster adoption, and costs continue to come down. The differentiation that you'll see then will be at the platform and application level of companies like ServiceNow. The models don't really matter, and we can connect to any model. And so what I'd say is that what we're seeing right now is baked into our guidance. But as these models continue to reduce in pricing, that could be potential upside in the mid and long term for sure.
Gina, just from, and still obviously very early days in terms of gaming this out, but what does that upside look like?
Well, listen, I think it's early days. I gave pretty strong guidance on both operating margin and free cash flow margin. So we increased operating margins this year by 200 basis points, and the guidance for next year is another 100 basis points accretion. Free cash flow, 100 basis points better this year, another 50 basis points next year, and that's on top of paying incremental cash taxes. And so you're continuing to see what I think is an incredible balance of best-in-class top-line growth, as well as best-in-class bottom-line margins, and only potential upside from here.
Gina, the shift to the pay-as-you-go model pricing here for the generative AI tools, what does that look like in the short term?
Well, so a couple things. We had an option, right? So I talked about we have nearly 1,000 customers already using our AI products. We could have launched a brand new SKU with the Agentic AI, or what we did instead was basically say all of those 1,000 customers automatically get our Agentic AI, and once those agents become more and more productive and drive more capacity, the consumption will continue to go up. So it's all about getting really fast adoption of our incredible capabilities and then driving that incremental monetization. So it's not an or, it's an and. we have this beautiful subscription model that's very predictable. But as these agentic AI capabilities get more and more traction, the ability to continue to drive value for our customers and then monetize internally is greater. So it's a big hockey stick of growth, but I want to make clear it's an and. It's this great predictable subscription model as well as potential upside in the future for incredible agentic AI.
All right, Gina, always great to talk to you. Thanks so much for taking the time.
Thanks, Shauna. Thanks, Josh.